Okay, so here we have a budget and cash flow projection we created for a security company. We have operating costs or monthly costs and startup costs. Here in the title, we can see the total monthly estimated operating cost. If you want to see the startup cost, all we have to do is click the button over here and it changes. We can see the total startup cost. If you want to see the operating costs again, you're just going to click over here and it brings back the operating cost again. Now the budget is broken down as so. Over here we have the expenses or the expense headers, office expenses, vehicle expenses, subscriptions, corporate level compensation, function level compensation, and so on. Over here we got the hourly pay, work hours, unit cost, frequency, if it's monthly, bi-weekly, daily, whatever it is, and the quantity. And over here, the total amount per expense. Now, as you can see, all the amounts are set to zero. And in order for us to change it, we'll have to expand the budget. We go over here, we click 2, and the budget opens up, and we see all the group of accounts. So in order for us to see the total amount per account, which would be the calculation of this time this, or over here, if we have the hourly pay per guard, stuff like this, all we have to do is go to this X and drag it down, as so, and all the numbers pop up. We got it over here in the headers. They calculate the group of accounts they control. If we see an expense over here that we don't want it to be factored in, all we have to do is just delete the X next to it, and it will change off at the account header and the account itself. You see some of them are operating costs, some are startup costs, so we can just delete more X's. We don't need this. We don't need a car logo, stuff like that, just to lower the expenses. Now we also added a controller over here to better control everything. Let's bring it out. Bring it over here. So if you want to change anything like W2, the number of W2 guards, number of supervisors, the hours per month per employee, the pricing rate, the growth rate, total monthly hours, the guards hourly pay or the business level hourly pay, that's where we're going to change it. So let's put here 50 guards on W2. And let's say we need 4 supervisors, and they're all going to have, let's say, 120 hours per month per employee. The pricing rate, let's set it at 10%. And the growth rate, let's do it at 3%. And the total monthly hours change accordingly. It's 50 guards times 120 gives us 6,000. The guards hourly pay is net. Excel will calculate it for us with the federal unemployment tax, the state unemployment tax, Medicare and Social Security. They will all be factored in the expenses, and that will change the estimation of operating costs. So let's click calculate, and here we got it, the expenses that we'll have with this amount of guards and supervisors and what we pay them, and all other expenses over here. We're looking at $39, and with a pricing rate of 10%, we will be making $43.88 per guard. The monthly income will be 263,000, and the yearly EBIT, the earnings before interest and taxes, will be 287,000, and the operating margin will be 9%. Now, always remember that everything here can be tailored to your needs. We can change anything in here. We can add stuff, whatever you need to better run your business. So from here, let's move to the cash flow projection for our security company. So here we have the cash flow projection. We got the start date over here, money in, number of clients that we're gonna have, and the money out, the expenses, the closing balance. We're gonna have the total guards count for that month, the total supervisors count for that month, and the total monthly man hours for all accounts we're gonna have in that month. And the subcontracted payroll is also gonna be factored in here. In the money out, as you can see, we have the account headers that were brought from the budget. Here at the top, you're going to see the startup capital, which is the initial investment of the startup company, or the money we have in the bank when we start our projection. Now, with Excel, we can always sync our bank account to show on our workbook through an add-in that is called Money in Excel. And let's change the startup capital and see how the numbers change. Let's set it at 500,000. You can see the numbers changed over here. And if we change the start date, let's say 12, you can see that the month changed accordingly. Great. So how do we bring in all the numbers for the projection easily and error-free? For that, let's call our controller. Load it in. And here at the bottom, we're going to find new cash flow projection. Let's click on it. And we got another controller for the cash flow projection. So here we can select our account name from the drop-down over here. As you can see, we got the list of clients. Or we can enter a new client. Let's call him test client. And enter it. And as you can see, it was entered over here. And let's choose the month for which we want to do the projection. Let's say the first month. Now let's put in the number of guards. Let's say for the test client, we get 60 guards. And for that, we're going to need 4 supervisors. And the account brings us monthly work days, let's say 15. And the man hours per day, let's say 12. And the estimated price that we're going to charge is going to be $18 per guard. Now the payment is going to be net 30, net 40, net 60, whatever you're going to close with your client. So for here, for this example, let's say 30 days net. And we're going to need reinforcement of another 10 subcontracted guards. Click over here. And let's see how much money we're going to get from that account. We're going to click over here. Now you see that Excel calculated we're going to get $160,000 from that account. And the cash flow started at 500, 500, and now we get 660, 560 in the third month. The reason why it's in January and not in December is because we get paid net 30. So we get paid 30 days after we complete the job. So instead of being here in December, Excel put it in January. So let's figure out what will be our expenses per guard per hour And for this kind of account, we're going to click over here with the number of expenses that we have over at the budget. So if we want to change the expenses and reduce them, we can do so by pressing the Enter Expenses button right over here. And it brings us the list of accounts again. So we can just delete expenses that we don't need and run the projection again. Let's say we don't need the CPA for this month. So we can just, if there's an X over here, that means it was factored in the calculation. So we can just remove it. And maybe we don't need Google Ads. There's an X over here. We don't need it. And we don't need our newspaper ad. There's an X. We don't need it. Facebook campaign. We don't need it. Let's see if our Google was removed. Click on Google Ads and you see the X doesn't exist anymore. That means the account was removed. So if we click over here again, the 1 month projected hours and per guards, you're going to see the expenses will change, slightly change, just by a few cents, $31. So we can always mix and match over here or go back to the budget and delete the excess over there. Now all we got left is to run the projection and we have the money in and money out for the first month. If we get another account and we want to add another money in for our projection, we can just go over here. Let's say client 4 brought us another account for the month of December. We're gonna need 40 guards for that account. And we're gonna need two supervisors. They're gonna give us 12 hours, 12 work days per month with 8 hours per day. The price stays the same. They're gonna pay us net 30. And the subcontract guards, let's say we don't need them. We can just do 0. So we're gonna enter the money in and we got more money coming in from client number 4. We can run the month projected hours per guards and see if the expenses change. And they did, because we get more man hours. That reduces the cost. We can always have charts or graphs to help us better visualize the numbers. And now what we got left is the money out. Let's run the projection. It has a message asking us if we did what we had to do, delete all necessary or unnecessary accounts, expenses sheet, and made sure the first time expenses are marked or unmarked, whatever you want. Click yes, and yes. And there you go. We have all our expenses factored in. And as you can see, the number was reduced over here because of the expenses. So we started out with 500,000. We had these expenses for December. So we got left with $39,000 after we brought in these two accounts with all the expenses that we incurred. So we can continue doing so and fill out the entire projection each month with the accounts that we believe they're going to come in or that we know are coming in, and that wraps it up. Thank you very much for watching.